As we go into December, quite often you hear stories crop up about the opportunities around the so-called Santa rally. Portfolio manager here at IG is Oliver Smith. He joins us now with some more analysis on this, and we have to ask the question straight out: is it myth or is it a reality?
Well, as astonishing as it seems, I think it is actually reality. We all look into any data points with a skeptic's hat on. But as we're going to lead on to, we have run the numbers and it's pretty conclusive.
So I think you've run the numbers just on the FTSE 100, haven't you? The main benchmark here in the UK.
Yeah, that's right. This is something we looked at last year. So we decided to run 30 years of data looking at December returns. And I think most investors know that December is traditionally a very strong month for the FTSE 100. It's the best performing month. Investors would have made about 2.5% a year on average. But instead of looking at something that everyone knows, what we wanted to find out was, is there a Santa rally, and actually at what day does it start, or what's the best time normally to invest?
And the answer to that?
So we crunched numbers. We ran 465 different time combinations over December, whether that's from the 1st to the 3rd, the 5th to the 20th, etc. And what we found was that there was quite a lot of clustering around mid-December. So 14th, 15th, 16th of December is more or less when the Santa rally starts. Particularly if you take the 15th of December to the 31st, we found that the average return over the past 31 years now is 2.5%. And what's absolutely extraordinary is that if you take the first 14 days, there's no return at all. So
that's interesting. Let's do this in the context of where we are now, bearing in mind we've got a lot of uncertainty in the market. We've seen recent highs recently in the States. There's a lot of supporting wind given by US tax cuts at the moment in the air, central banks, but we've got geopolitical worries, we've got Brexit behind us. Of those fundamental issues, what should we be most aware of as we go into what is now going to be the second week of December?
Well, I think the first thing we've got is US potential interest rate rise. So the Federal Reserve is pretty much baked in, but that is something which everyone expects. Donald Trump's tax cuts are due to be passed, and the Brexit negotiations are ongoing. I think, if you take the period before Christmas, generally not really much goes on. And this really is why, probably with markets with thin liquidity, people rebalancing their portfolio, perhaps people investing money from their bonuses, is why we do see that steady accumulation of value in those indices.
And generally speaking, are we talking about taking money out ahead of the weekend, the Christmas weekend, ahead of the weekend of the 25th? Is that the point where we should take money out, or should we hold until the end of the year?
No, certainly if you believe the data, 87% of the time between the 15th and the 31st, people have made money, and the biggest drawdown we saw was less than 1%. So, while we can't say that this will happen every year, certainly the seasonal effect does appear to be strong around this time.
So there is statistical evidence to back up the idea that it is not a myth, it is a reality.
It's not a myth. Yeah. But of course, whether that will continue, we just don't know. It was good last year, up 2%.
This could be the exception, of course, but who knows?
Indeed.
Ollie, thanks much indeed. Oliver Smith is portfolio manager here at IG, taking a look across some of the numbers that sort out myth from reality when looking at the FTSE 100 and that Santa rally.